Welcome to the channel, everyone. My name is Nick Armenis, and in today's video I'm going to take you through the list of stocks that I think are the best stocks in May 2021. Guys, before we get into the content, please subscribe to the channel, hit that notification bell so you're the first to know of any new stock videos I release. This channel is all about ASX investing, and I've got a blog I'm about to launch as well, so please stay tuned. Got some really cool updates to come. Let's get into the content. Before we go any further, guys, please note I'm not a financial professional. Please get advice. I don't want to get in trouble, and I don't want you to lose any money because obviously I'm not a financial professional. This isn't tailored to you, okay? I wanted to do a brief introduction as to how to use this video because I think some people are getting confused as to what this video is. So these are stocks I'm currently looking at or doing more digging into. I then make deep dive videos on the stocks I find most promising, I guess, or ones that people have most interest in, okay? So I also want to make things that you're interested in. These are definitely not buy recommendations. They're just the starting point and a way to get ideas. I actually use it as a sanity check to check my investing and see if it's good because I get ideas from you guys as well. My style is not that of a very active trader. While I do swing trade, normally it's like a 2 weeks, 1 month, 2 month kind of time frame. Sometimes it's up to 6 months or more kind of a trade. I do probably tend to do bigger swings than most people, but yeah, I also like to invest in decent businesses making money. I'm not one that goes into super speculative stuff, but I'm not a hardcore value investor either. So I'm more than happy to take a punt on something that I think has good growth and is a good business. And I think I'm normally pretty good at gauging if something's a good business. I normally get the timing wrong because it's really, really hard and pretty much no one gets it right. Okay, so the first stocks I'm going to cover off are the large and mid-cap stocks, so a bit of the bigger ones. First one's Aristrocrat Leisure, ASX ticker ALL, and I have covered this off in the past, but I just wanted to do a bit of an update because I still think that this has a pretty good future. So what do? They're a gaming technology company that operates in over 90 countries. And by gaming, I'm talking about a gambling gaming company. So they offer a range of products and solutions in the gaming space, including pokie machines. So if you've ever played on a pokie machine, it was probably one of theirs. And casino management systems. They also offer social digital games, with its Big Fish Games being the world's largest producer and distributor of free-to-play games. They bought this Israeli company a few years ago, and it's actually doing quite well. So it's currently trading at $37.46, and as you can see, it's in a pretty good uptrend. It's well off its COVID lows, and I did say kind of a few months back that this was a pretty good buy. But I still think that longer term, this has got legs. It's 23.8 billion in market cap, so I still think it has quite a good runway of growth in the future, and it does pay a very small dividend of 0.27%. Obviously, it's well off its 52-week low of 23.75, but it has hit a high of $38.12, so it's pretty much near that. So here's my investment thesis. It's pretty simple. As more and more areas open up, demand for their gaming machines will go up. Especially in an inflationary environment, this stock will be good because gambling actually tends to do quite well in this environment. And also, you got to remember the reopening trade is people are going to come out and spend like they've never spent before because they've been cooped up. Especially like we've been kind of lucky in most of Australia, at least where I'm on the Gold Coast, it's been pretty good. We haven't been cooped up as much as other countries, bar obviously Melbourne. And when people finally get out, they're going to spend more. Another thing is their digital games continue to grow strongly, and it's well positioned to keep doing well in this area. And I think going forward, you'll see more and more of its earnings come from this division. It's got a very strong balance sheet. Actually, according to Morgan Stanley, it's the best in the gaming industry. So that's a big tick of approval there. It's received a lot of broker updates recently, guys. And while this normally means that big gains have been made, I still think there's probably a bit of upside to this. And you probably could look for a small pullback to make an entry, but for me, this is a longer term play, and I think this is a very good ASX business. One of the better ones actually listed here. So you're kind of getting almost, the growth of a software kind of business in the US mixed with, obviously the safer kind of pokey plays there. The next largest stock is Nextdc, ASX ticker NXT. So what do? I guess A little bit different to Megaport, which I covered off the other day. They're involved in development and operation of independent data centers. So they actually build and own data centers and obviously rent out that space in them. They focus on providing scalable on-demand services to support outsourced data center infrastructure, cloud connectivity, enterprise for all sizes. So obviously most businesses can't afford to build their own data centers that cost hundreds of millions, if not billions of dollars. These guys build them, and then people can obviously take up some space within there, depending on what their needs are. So it's trading at $11.42. Its 52-week low was $8.78, and it has hit a high of $14.10. It's got a market cap of $5.215 billion, and it's obviously had a pretty good run up. It's a slow and steady kind of upwards ticking stock. You're not going to get huge growth, but I do think that it's probably been a little bit oversold in the whole, I guess, tech kind of inflationary scare of the treasury yield spiking. But I think this stock longer term is going to do very, very well. So my investment thesis, long term, it's a big beneficiary of the move to cloud and increased data usage by businesses. And COVID actually accelerated this, brought forward a lot of sales. But I think that it's kind of proven itself as a concept. And in essence, this is going to eventually become a little bit like an infrastructure stock, but it's still in its growth phase. And eventually this will be a dividend-paying business, a strong dividend-paying business. Had a really good first half update, guys, with revenue up 27%, EBITDA up 29%, and customers up 16%, which is really good for a business of this size. It also managed to restructure its debt, so it has improved terms, and obviously sets it up to borrow more to fund new data centers in the future. Also gave very good guidance. Guys, note this is a very cyclical stock. Normally has a quick run up followed by some sideways action for some time, and it kind of repeats that on a kind of cyclical basis every 6 months kind of a period. So at the moment it's probably in its sideways trading pattern, but we'll wait and see what happens there. But to be honest, I mean, if you're looking at this a year, 2 year kind of view at least, this is still a good entry point in my view. So moving on to the small caps and I guess the more speculative end of what I think are some good stocks to look at. The first one is Dubber, ASX ticker DUB. So what do? It's a cloud-based call recording and audio asset management platform in Australia. It offers cloud-based call recording platforms and Dubber AI, which helps in transcribing calls and analyzing the language used to apply sentiment ratings to calls, as well as compliant features and services to service providers and enterprises. So it's a pretty cool little system utilizing AI to, I guess, improve customer service and do a whole range of tasks as well. Currently trading at $2.79 and has obviously had a really good run up. Its 52-week low was 90 cents and has gone as high as $2.89. Has a market cap of 713 million, so it's still on the kind of, I guess, smaller end of town on the ASX. Not teeny tiny, but it's definitely becoming a lot bigger of a business. It's obviously, you can see that it's had a tremendous run up here in the last few weeks, and I'll kind of cover off why in my investment thesis. So it's an interesting software as a service play, which you don't get a lot of them on the ASX, and it's in an industry traditionally dominated by hardware businesses, so it's a bit of a disruptor, and I like that about this. It has a very strong recent business update with revenue up 152%. With revenue up 152%, ARR up 158%, so annualized recurring revenue. That's what I like, is a recurring revenue model business. And subscribers up 155%. What I do like, guys, is it's continuing to expand its footprint, going live on 3 AT&T networks, in the USA. So it's kind of growing over time into different regions. And it's become one of the only 2 vendors compliant for recording with Microsoft Teams. And Teams, as you probably know, exploded during COVID work from home kind of period. Typical business communications, guys, this is a key point that I like. Typical business communication usually involves the use of desk phones, mobiles, and UC services such as Cisco, WebEx, Zoom, Microsoft Teams. Dubber is uniquely placed to be able to capture recordings and voice data from all services and store them in a single location. The Dubber Voice Intelligent Cloud, where they can be managed centrally, everything kind of gets stored there, guys, and these businesses have access to it utilize reporting, and then make decisions based on the data. So it's a very powerful tool, automating something that used to be very, very manual. People used to sit there and either transcribe them, record them, and just listen back to them randomly. But this is able to quickly do things in mass, use AI to kind of pick something out that they want to highlight. Maybe it's a complaint or something like that. But it's a cool little business kind of automating a very manual task. I will say, guys, it's run very hard, so I wouldn't be surprised if there's a short-term pullback here. But definitely, a business that's an exciting one to look forward to, I guess, seeing some even better results. I'm not rushing in to buy this yet, but it's definitely something that, kind of got on my radar because it's doing really quite well of late. The next one is Mader Group. I'm not sure how to pronounce it. ASX ticker MAD or MAD, which is a pretty cool ticker. So what do? They're a maintenance services company that deals in the provisioning of specialised contract labour for maintenance of heavy mobile equipment in the resources sector in Australia, Asia, Africa, and the Americas. So mainly, I guess, these guys service the equipment of mining companies and I guess other companies as well, but mainly mining companies at this stage. It's currently trading at 94 cents and it has been as low as 72.5 cents and as high as $106.06. Has a market cap of 188 million, so it is on the smaller end of town. Pays a nice little dividend of 3.13% as well. It trades on a very low multiple of 10.68%, and that's because these businesses are super cyclical. But I'll tell you why I like this business. And I actually did buy some of this stock. With mining companies continuing to do well, this trickles down to maintenance companies like Mader because they buy more equipment, they're more active, so the machinery needs more servicing, breaks down more, and these guys need to come and do maintenance on it. With them being a tap-on, tap-off business, they really do well when times are good for big miners, and they obviously do really badly when they don't do well. Recent quarterly update was very promising, guys, delivering a record quarter for the business of 75.9 million, up 5.7%. Definitely not a growth company, but it's a very, I guess, safe, stable business that's in a phase of growth. And because these are so cyclical, this is probably ripe for, I guess, a few months to a year kind of trade for this. They're seeing significant levels of customer demand, guys. This is what they said in their recent update, which underpins a positive growth outlook for the business globally. So they're expanding overseas as well, guys. They've got a very strong footprint in Australia, but they're expanding globally and they're seeing demand everywhere. It's now branching into Canada as well, and it will be focusing on infrastructure, which is where governments are going to be spending big. So they should be a beneficiary of this. And what I like is, while mining companies have run, some of these mining service companies, the bigger ones have run, but some of the smaller ones still haven't. And it's going to trickle down, and this should do quite well in my view. Hence why I have purchased it. But obviously, do your own research. And let me know in the comments below what you think of this business. The next one is Pointerra, however you say it. It's quite a popular little stock. ASX ticker 3DP. It's one of these ones that have actually been on a bull terror. So what does it do and why is it globally disruptive? Pointerra is the first cloud platform that allows users to see, use, and share massive 3D data sets, okay? So think miners, architects, builders, all these different people, especially multi-site. If they've got a 3D data set, it's very hard normally and uses a lot of computing power, and it's very hard to share it as well. It's also quite hard to get insights of it without plugging into something else. This kind of is a full solution. And this allows you to obviously do all these things. The result, massive time saving and workflow efficiencies across a wide array of industries that are reliant on and use 3D data on a daily basis. So prior to these guys, 3D capture, so it might have been a plane, a vehicle, a camera, a surveyor, got the data, it was processed locally, stored locally, and used locally because there wasn't this ability to store it in a cloud, which is the Pointerra Cloud 2.0 engine. And then, the operations team in Perth could use it, asset review in London, mine plan in Africa, and investors presenting in New York could all use the same data. And basically you can harness the cloud to process this data as well as store it. And so you didn't need to upgrade all your equipment to be able to, properly do all the grunt work that needed to be done. It's done in the cloud, it's much quicker. So this has had a terrific run, guys. It's currently trading at 62 cents, but it was as low as 3 cents early in the year, and it went as high as 92.5 cents. It's got a market cap of 440 million. And so I'm kind of I'll get to the investment thesis, but in my view, this is quite a risky play. It has a small market cap, And you could see this being, if all things go well, a few $1 billion in market cap eventually. But to me, it's got a long way to go before it can prove that. But this is just my opinion. My investment thesis, it's solving a big problem around using and sharing large 3D data sets, and covers a wide range of industries. So you can see mining, oil, gas, construction, engineering, infrastructure, etc. It's acquiring a drone business in the US, which will allow them to offer additional services and gives them a stronger foothold into the US, where trillions are going to be spent on infrastructure, which is cool. Business is still very early on its journey, guys, so it's quite a high risk, with annual contract value only just over 7 million, very, very small. So it needs to really get a lot more business through the door before it justifies its valuation. And, potentially it grows into it, and, in a long period of time, you might see it doing quite well, but, it's got a long way to go from there. And it's like, there's nothing sure about this yet. I find it very hard to value this business, and hence to me, it's more of a speculative play. If you have an understanding of this industry more than me, or, you really think this is the next big thing, that's kind of like, it would be a small portion of someone's portfolio. This is where I'd see it. I'm not a huge fan, but then again, I don't quite understand the business well enough to make a call, but it's definitely something that's come onto my radar as something that, I plan on doing more research in and presenting to you my findings. So guys, I hope you've enjoyed this video. Please subscribe to the channel, hit that notification bell, leave the video a like, and leave a comment below letting me know what you thought about it or what you're looking at the moment. Thanks guys, and see you in the next one.